called Basel III Endgame. It's essentially a whole slew of changes, regulatory reforms that are going to be taking effect on July 1st, 2025. The biggest one, the one that I've dedicated most of my time to look into, is the increase in capital requirements for major banks and regional banks. There'll be an increase of 21% capital requirement for large banks, the 8 largest banks in the country, and then a 10% increase in capital requirements for all regional and local banks.
What's the current reserve ratio right now that they're required to have? Do you know?
Yeah, the current reserve ratio is actually 1.1%. Holy shit, are you kidding me?
Wow.
Yeah, it looks like it's 1.1%. So they'll be increasing that by 10% for regional banks, then 21% for the 8 largest banks in the country.
So what you're saying is, right now, before this regulation, if I deposit $100, they're only required to keep $1 and lend out 99?
Yeah, it sounds a bit low, right?
That's insane. Holy shit.
Net transaction account. Okay, so it looks like over a certain amount, net transactions for account balances have to have a 10% reserve requirement. So it looks like 10% is like the effective rate for a lot of people's funds.
Right now?
Yeah.
Okay.
'Cause it works on a scale. Like not all funds are subject to the same reserve requirements.
Basically, the more that's deposited, the less you have to lend out, it sounds like.
Yeah, essentially.
What effects do you think this can have on these already struggling banks? Now they have less money to lend out and make a profit while they're already like teetering down.
Yeah, well, obviously the issue is that there's going to probably be a restriction on available capital for consumers and borrowers. I mean, that's going to be, that's the necessity of what like a recession is, economic slowdown. When people have less funds to work with, they're going to be less likely to undertake large projects. Without companies and individuals undertaking large projects and purchases, you have a slowdown in economic growth. So increasing reserve requirements is essentially, it's counteracts economic growth. You can see why the Federal Reserve wants to increase reserve requirements, though. Obviously, there is fear of bank failure because we've had, was it like 4 or 3 of the 4 largest bank failures in U.S. history happened last year. So there's obviously concern that bank failures could, we could have a lot more of them this year, especially with how much debt people are holding. Like there's an insane amount of debt being held right now. So if we see some large defaults, if something starts to break, there is a necessity to hold a lot of reserves in order to prevent that. But what I've been predicting for a while is we're going to probably see a recession this year, though I've seen like 50-50, and Basel III doesn't come into effect until 2025. And then it's going to roll in from 2025 till 2027. So it really won't affect a lot of decisions this year when it comes to like if you want to figure out, are we going into recession 2024? I'd say Basel III is not going to be a big determinant for that. But if you're looking out like 2 years from now, factoring in Basel III would be smart. And if we don't get a recession this year, I mean, like we have to have a recession at some point. I would say 2025 would make a lot of sense for a recession to roll around, but we'll see.
I keep thinking that it's 2023, so I'm like 2025 is 2 years from now, but that's really just next year.
Yeah, that's next year. I know we're less than a year away now.
Yeah, man. I would not have thought that the equity markets will be where they are right now.
Nobody thought the equity markets were going to be where they are right now.
Yeah, it's crazy. Well, that's good. 2025. So at least, that gives the market some time to kind of reset itself. Hopefully, what happens.
Well, a part of the Basel III Endgame is new rules regarding credit risk transferring. And the reason why I know about this is because I'm going to be actually speaking with a group of banking and business leaders on Wednesday about this change and proposals that are being implemented right now in order to fix some of the Basel III issues. So there's a lot of concern that Basel III is going to lead to a credit crunch, that's going to lead to the inability for banks to lend out at their current rates. and that could slow economic growth. There is a way, though, to mitigate some of these negative effects from an increased reserve requirement. And one such way is credit risk transferring, or CRTs. And CRTs are extremely useful. And what they essentially are is if you have a loan and you have risk of default on those loans, you can take the risk of default on those loans and then basically sell it to a reinsurer. A reinsurer insures your insurance, basically. So it's like if you have a chance of defaulting on some mortgages, the reinsurer, if you pay a fee to them, can then cover your mortgage fee. So if you default, they'll then cover the expenses, the liabilities that come from default. So you avoid a lot of the risk. And if it takes some of the risk off the table for banks when it comes to lending, this will then encourage more lending from banks. So though reserve requirements will be higher, if we are able to, and what would do this is if we classify reinsurers as eligible guarantors of credit risk transfers, then that would help to mitigate some of these negative effects and incentivize more lending from banks.